watching Stockwatch. I'm Simon Brown, and joining me to unpack your stock-related questions today, David Shapiro from Sasfin Securities, Chantal Marx from FNB Wealth and Investments. Be sure to send your questions through. Email stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV using hashtag Stockwatch. Chantal, David, appreciate the time. David, I want to start with you. You've just come back from the States. Trump is threatening pharma stocks now. Question came through. I hold some of the GLP-1 drugs, GLP-1 drugs. I'm worried about them. They're under pressure, and Trump is sort of rattling his saber. Would you be worrying? I mean, Trump so far seems to capitulate in everything.
I don't look. The whole health system is such a mess there, and you've seen it in United Health, which is actually a very big component of the Dow, and you've seen that come under pressure. I mean, it's probably lost half its value in the last couple of months. It's all over the place. I think there is the need to reduce drug prices in the US. You know, that is something that is a fair comment, and I think he's right in that respect. How he's going to do it, I don't know. I still like the Novo Nordisk. I still like the Eli Lilly simply because of what they're providing. But just expect the volatility continue, because I think each day, each new rumor or a little bit of news that comes out sends them flying in either direction. But fundamentally, I think those are probably the only two stocks that I know going to continue selling their product and do well. But Simon, just it's a difficult sector to understand and to grasp. I'm talking the whole pharmaceutical side of it. But I stick to Eli Lilly. I stick to Novo Nordisk.
Chantal, your take. To David's point, I typically stay away from it because I'm not sure and because I worry about regulatory and all the other bits and pieces. Your take on healthcare and the GLP-1 drug manufacturers?
Yeah, I really like the GLP-1 story just because the total addressable market is so massive. I mean, the estimates in terms of people that are living with obesity or that are pre-diabetic, for which these drugs are vitally important to live a long, healthy life, is just absolutely massive. So at the moment, you have Eli Lilly and Novo Nordisk being the main players there, and most of their patents are only expanding beyond 2030, and they're making progress in terms of a different delivery for these drugs. So currently you'll have to kind of stab yourself in the stomach with a needle. But I know that these guys are working really hard on getting a weight loss pill. And that will again change the entire dynamic in the competitive market around it. So I think earnings estimates are still very strong. The stocks have come off notably. And if you're a very long-term investor, I'm saying like maybe a 5 to 10 year long investment horizon, I think you rarely get opportunities such as you have now to invest in companies like these at the levels that they're trading at.
Yeah, and I can't put on weight because I can't be stabbing myself.
I was at a dinner in Boston, and just to give you an idea, so a very nice lady, husband's in biotech, and she kept saying, she says, all my friends are getting smaller and smaller and smaller. She says, the problem, it's almost forcing her, and she's very small, to go on to GLP-1s, to go on to Wegovy, and that simply, she says, everyone's just shrinking around her. So to give you an idea that it's there's a lot of fashion around it as well.
Yeah, no, I hear you. And I'm looking at the Eli Lilly share price, and basically, I mean, it's down 2% over a year. Now, it was at one point up quite nicely, but this is hardly a collapse. Chantal, question coming through, and the question is quite simple. 91, there's a PLC and an LTD. Does it matter which I buy?
It really doesn't matter much. Particularly if you're a retail investor, you're basically buying the same underlying. It's a complicated dual company structure, but it actually doesn't matter much at all. The kind of ownership around it is a little bit different. So if you look at, for example, Investec's ownership of 91, N91 or NY1, then it'll be slightly bigger on the one side and slightly smaller on the other side. But that shouldn't make a difference to you, and it shouldn't make a difference to the investment case either.
Okay. Question coming through, Tencent, strong earnings. Is there still space in a portfolio for Naspers and Process? Chantal, those were nice earnings. So they're not quite what we maybe, 10% of many years ago, but I thought they were decent. And your take on the business and Naspers and Process?
Yeah, we'll talk about my stock picks later, Simon. But certainly the Tencent results I thought were really solid in the context of a China that has been under so much pressure and where economic growth really has lagged post COVID-19. So I think that what we've seen more recently is a really nice re-rating in that share price. Tencent itself, I think, is probably trading at around a fair value currently, but still with pretty decent growth to come. And the results print this morning just showed us that a lot of the worries around China internet and China technology were probably a little bit overblown. Naspers and Process, we'll get into that later.
We'll talk about that later. David, China, Tencent. So we've got a piece in our time with trade deals. Kind of, sort of.
And look, you have to hand it to them. They've come back from the brink. Also remember, not only is it on the gaming side and on the social media side, but on the AI side, do not underrate AI, really at your peril. And I just think that this is going to get bigger. We all thought that we were going to see the end or the death of big tech. In fact, I think it's just the start. And now, both Alibaba and Tencent are coming into play as well. So I continue to think there's more upside. And these results are very respectable, beat forecasts. And of course, Chantal will tell us about the follow-through to nice person process.
but then let's stay offshore. Let's stay with big tech. Let's stay with Microsoft, a company that was for a long time lost. New CEO made the world of difference. Question coming, and there are actually a couple, but one of them, Microsoft, worth having a look at for a long-term portfolio. David, surely.
Absolutely. I think those big tech are going to get bigger, and whoever is coming up needs those big tech companies as well. If you understand what I'm saying, they form the platform, for other businesses to thrive, mainly because of their heavy exposure into data centers. And if you looked at Mr. Trump yesterday in Saudi Arabia, his new Elon Musk is actually Jensen Huang, who's there, actually discarded his crocodile skin jacket and his black T-shirt and actually put on a suit. And doing big deals there and hoping Saudi Arabia to build their data centers together with AMD. So I think I think this is an area that's just going to grow, and you've seen the impact on NVIDIA. So I think all of them, Microsoft, all of those who are exposed to that area are going to continue, to grow and give you performance.
Yeah,
and remember, they're still down a bit, so you're getting them slightly cheaper than you did at the beginning of the year.
Yeah, I want to go see pictures of Jensen Huang in a suit. I've only ever seen him in his leather jacket. Chantal, Microsoft, it's one of those things. We were talking about a few weeks ago. My subscription for my Microsoft Office has come along again. I think it's gone up 30%, and I'm just going to pay it, because what else am I going to do?
Yes, and that was exactly the point I wanted to make. You have this growth angle that is really centered around AI applications, cloud adoption, data center, and all the rest of it. But then you have this annuity income stream from the old school office products that we're all using on all our PCs, and that have just become integral in terms of our day-to-day ability to do our jobs. So I really like it because I think it's actually slightly more defensive than some of the other hyperscalers. But I agree with David as well. I think generally, if you take a very long-term view, almost any one of these companies in the Mag 7 universe, and I say almost because I have a specific stock that I don't like in the Mag 7, are worth buying.
You can say it, Tesla.
David, you know me too well.
Yeah,
we all just. I must tell you, you've got no idea how that brand has been damaged by Musk. People don't want to buy. You can't. Tesla sales are down. And no one wants to drive their Tesla because of the damage that he's done to the brand. Yeah,
my brother-in-law's in France, and he's buying an electric vehicle in the next week or two. And I said to him, which one? And he's anything but Tesla.
Yeah.
Chantal, a question coming through around the Anglo American Anglo Platinum demerger. I hold Anglo American. I want the Anglo Platinum shares, and in fact, I would like some more Anglo Platinum shares. Would it be cleverer to buy Anglo and get the unbundling, or do I buy Anglo Platinum direct?
So I think that it's better to just buy the Anglo Platinum directly. If you're going to buy, if you're not specifically interested in holding Anglo American itself, then just go directly and buy the Anglo Platinum. Just beware, you'll probably get a little bit of volatility in the share price post the unbundling, because some of those Anglo American shareholders may not want to hold their Anglo Platinum shares. But yeah, I would just go direct without the mess. If you do want exposure to both, then now is probably a pretty decent time to buy Anglo American, although I do think that the share price isn't particularly cheap. They're cleaning up the portfolio. They're going to basically position themselves as a prime takeover target. So I do still see an investment case for getting involved there as well.
Chantal, would you keep the Anglo Platinum if you got them, or would you sell them?
I'd probably keep them. I think we're at the bottom or just possibly past the bottom of the PGM pricing cycle. And I think there's a lot of value trapped in these assets, particularly if we get a meaningful uplift in PGM prices going forward. I don't think we can persist at PGM pricing levels where they are currently. The market is in deficit. At some point, I would expect it to start reflecting in PGM prices. We've seen a bit of an uplift more recently, but I think nothing sustainable to get overly excited about. So yeah, I mean, I would keep them for the time being.
David, would you keep Anglo Platinum if you got some?
Well, we've been calling the bottom now for going on for 3 years, I think.
Yeah.
You know, and I'm saying I'm part of the crowd there. Yeah, we're at the bottom. You know, because you've got this base that just goes in this very like channel. It's and it's a strong base. So I mean, technically, and I'm not a technical analyst, if it does break out of that base, then however long the base is, that's the rise. You know, you get a perpendicular rise. But I'm not a young man anymore, and I'm not sure that I will live to see that happening.
Okay, I take your point.
I don't know. The commodity shares are notoriously difficult to read.
Yeah, that's why we need Wayne McCurry, because he and his point was, and he made the fair point. He said that the cycle will turn. One day we're going to be talking about these in the inverse, much like we are gold stocks. But I'm with you. I mean, like Wayne got retired before they eventually rallied, and I'm nervous about that. A few announcement yesterday from Exoro buying into manganese. It's digging into this. It turns out like 70% of the world's manganese is in the Northern Cape. I did not know that, but now I am. What do you make of the deal? I like the idea around diversifying away from coal. It's an 11 billion deal, maybe a little more or less, some T's and C's. Your thought on Exoro going into manganese?
Yeah, so they needed to buy something in order to diversify their base, because thermal coal is a declining market over time. So even though you still have support kind of near term because the energy transition hasn't been fulfilled, they have to think about the next 10, 15, 20 years. So they need to go somewhere where demand will hold up. They do have some iron ore exposure, and I think manganese is actually a really nice complement to that. The iron ore exposure, they have those indirect recession iron ore company, which is also partly owned by Kumba Iron Ore. Just an interesting kind of diversion there. But I think manganese is interesting because it's used mainly in steel making. I think longer term, you still have really decent demand for steel going forward, probably into perpetuity because of the infrastructure angle, right? So we are actually underinvesting in infrastructure as a world currently. There's an urgent need to pick that up. And then, of course, you need to replace over time as well. So I think if you look at the market fundamentals of manganese, it makes perfect sense. It's also expected to go into deficit, I think, in 2027. The deal's going to close in 2026, and Exoro has more than enough cash to make it happen. They didn't buy it at the cheapest multiples, though. So I think that's a little bit of a question mark. But I think that it was a decent deal for them, and hopefully it works out. You never know with these mergers and acquisitions in mining. You never know with mining, Simon.
You never know.
Where does Chantal get all this information that she can just rattle it off?
She does work,
like
David.
In front of her.
She does work. She reads stuff. Yeah, it could be called cheating. It could be called cheating. I mean, I went and found out I know way more about manganese than I ever thought. But David, I mean, Chantal's last point is you never know with mining. I mean.
Yeah. The one thing about the manganese miners is that they're big margins. So even if the price does fluctuate, they still make a lot of money. And we've seen it over the years in Aspen and Asor. Asor is no longer listed as well, and it's almost like a Kumba type situation. Where they mine at such the mining margins are so big that they can continue to operate regardless of the fluctuations that you see in the prices. So they are very good businesses. I'm not sure, and who the seller is, because it seems to be privately sold, private assets and that are being sold. So I don't really know the mines that they're selling that well.
Yeah, okay, and it is 70% of the world's manganese is in the Northern Cape, and I did not know that. David, back offshore, question coming through. What about Coinbase as adding a small position into a portfolio? So I'm asking you about Coinbase.
The right person to ask on cryptocurrencies and that. I see it's getting into the S&P 500.
And I think that's the excitement.
500 different stocks there. I really don't know about it. I hate to comment on crypto, that area of the market. I can't even get around, what I do on a day-to-day basis, let alone branch off into crypto.
Crypto's easy.
Chantal's got the brain.
But Chantal, what do you know about Coinbase?
So I'm the second worst person to ask about crypto and crypto-related assets. So I mean, Coinbase, obviously, it's more a platform story, right?
Yeah.
And generally, when you're looking at platforms, I would probably you'd look at a normal broker that looks at that buys equities and bonds and kind of traditional instruments, and the margins tend to be quite low and the margins tend to decline over time. So, I mean, I don't love the business model. You'll do well when volumes are high. You won't do well when volumes are low. So, yeah, I mean, I think there are better businesses that make more sense to me, where I understand the underlying fundamentals a little bit better, that I'd rather be invested in.
You see, the mistake both of you are making is you think there are underlying fundamentals in crypto. There really isn't.
Simon, I'm not even a gold man, I don't even buy gold. And even though everybody has made, mountains of cash, and correctly so, for the right reasons at that.
It's going bottom left, top right.
I like productive businesses. I love businesses that I can kind of understand. I don't like to put something in a safe and hope that it grows inside there or something. It's not going to do that. But anyway.
Yeah,
so
okay.
Crypto, no.
Okay, no crypto for you. Chantal, let's stay with you a moment. Lewis, we chatted about it on Monday. It was Alex's stock pick. I know it's one you've liked before. I can't imagine you don't still like it, even though it's had a giant run on Monday. And the question is, surely Lewis is still offering value even after the Monday 16%?
Oh, yes, absolutely. I mean, the stock is still cheap as chips. It still has a forward dividend yield that is higher than its forward PE. And that's always a really nice kind of rule of thumb to follow when you want to see whether or not a company is undervalued. So even after that 16% run, I would still be holding on to the share, and I still think there's opportunity to invest there. I mean, they've really cornered that market in the kind of the mid-range furniture space. They've managed their data book exceptionally well. They've cleaned it up. They had a pretty nasty legacy book that they've cleaned up quite nicely. They're a lot more responsible in terms of lending out money. And I think if you look at the SA consumer currently, even though there was a knock to sentiment, I would think at the start of the year, in reality, they're a little bit better off. We've seen wage growth coming through quite nicely. Employment looked bad relative to the fourth quarter, but relative to the first quarter of last year, more people are in jobs. And then you also have lower inflation and lower interest rates, and the prospect of further lowering of interest rates that will make people feel better about buying durable goods like furniture or semi-durable goods, depending on how you think about furniture. And additionally to take on a little bit of debt.
Okay, now that you said
these
semi-durable.
are finance companies. They're not
banks that sell furniture.
That's just the reason to get the debt,
But they do it incredibly well.
Look at the margins they make, on the debt and the insurance cover that they have and all of that. That's where they make the profits, not on selling you a bed that falls off, that falls over in a year's time or something like that. So, but they've always been well run.
Yeah.
They're always, even from their guts, they were great Universal stores. It's always been a superb business.
Yeah, and share count down 44% in the last decade, although semi-durable. And I'm trying to think, if my couch is semi-durable, what's durable? Okay, but let's park that.
Durable is if you drop it on your toe, it hurts. Yeah.
But my wine does that. David, let's stay with you a moment. Aspen seems to have settled around the 125. Time to follow the CEO into the stock or wait a bit?
Just wait. This is just it just hurts you every time you go into it, and there's always some other kind of problem. And we don't fully know what the problems are there at the moment. And I was just reading in the FM, the Financial Mail, there was an article written, I think you wrote it, it was you.
Yes, it was me.
Simon Brown. I'm quoting Simon Brown. I think you can actually give the answer to that. And you were very articulate, and your argument is absolutely correct. They've still got to find, throughput for their factories. And if they haven't got that, it's a marginal cost or a fixed cost recovery type situation. I don't know. I'm just disappointed. And this was a big fall.
Yeah.
And we still don't know the full implications of this deal. What it really means. We haven't seen the details.
Yeah. And just for the record,
you don't have to be clever at that. You probably make money at that, but you don't have to be clever until you know what the facts are.
For the record, when my writing is really, really wonderful, it's because I got copy editors from heaven. Chantal, the challenge, the challenge from them really is twofold. One is utilization, and two is trust. I mean, is it worth taking a look at 125?
Yeah, I mean, I think the trust story is really important because even in engaging with management after the initial drop and the initial announcement, they were like closed books. It's impossible to get any sort of clarity out of management at the moment. They're not meeting with analysts at the moment. And it's not because of anything sinister. I actually think that they can't say much because of the contract terms with whoever the supplier is. But yeah, I mean, that capacity could take years to fill, and while that capacity isn't filled, it's going to mean a big margin hit to their manufacturing business, because manufacturing is all about volume throughput, and if volumes drop, your margins drop as well.
Quick question before we head to stock picks: Boxer worth a look, or stay with Shoprite?
Yeah, I'd probably stay with Shoprite just because I think that Shoprite probably offers a little bit more upside at the moment. Boxer, I think, is fully valued, and that's why you actually saw the negative share price response to results that were bang in line with expectations.
David?
I was just a bit concerned about the fall in volumes in the last couple of weeks. They broke it up into various weeks, and the latest was a big drop. And I think that's where you've seen the weakness in the share price. When volumes drop, that's worrying. And that comes also on top of some of the employment data as well.
Well, yeah.
I know Chantal mentioned that things are slightly better than they were this time last year or something. But when I see the number of youth unemployment, see the actual levels of unemployment, it's not a good sign for consumption here, and in fact for the whole economy.
Yeah, okay, absolutely. And we're better off as South Africans than we were a year ago, but it's still tough out there. David, your pick is a defense ETF, ITA.
The two areas that I like at the moment, the one is defense. I mean, besides my Magnificent 7 X Tesla, the Magnificent 6, but I'll add in AMD rather than something like that. But I mean, I think the big theme, there are two big things coming through, is defense spend, and you're going to see Europe and even the US is budgeting for an increase in defense spend. I don't know where to go, so I've gone the chicken's way out, and I'm looking at an ETF, which is iShares aerospace and I think defense stocks. It's mainly focused on America and that, but it does give you an exposure to companies that I think that will benefit. I know Rheinmetall in Europe looks very strong and has done very well, but it is an area where we're going to see a lot more expenditure.
Yeah, absolutely. I think you're right on that. Chantal, as alluded to earlier, Naspers/Prosus.
Yes, I mean, we've been talking about the discount in Naspers and Prosus relative to its underlying holdings for years. But effectively, Prosus and Naspers have traded like proxies to Tencent for a very long time. And management has been trying to narrow that discount by buying back shares and selling down Tencent and buying more shares. But the reality is that the only way you're going to narrow that discount is to actually extract more value from the other underlying holdings, the other portfolio investments. And they've recently gotten in a new CEO, and it just seems to have energized employees and energized activity within that process stable. They're doing stuff. There's some proper portfolio management going on. There's a listing of some of the underlying holdings going on. There's expansions. There is acquisitions. There's just activity there. And I like that energy, because I think that's how you're really going to start seeing a narrowing in that discount. Further to that, if you look at tech globally, Prosus is probably one of the cheapest big tech stocks you'll find. It's got Europe. It's basically European tech. It's the largest European tech company, and it's trading on a 11 times forward PE. If you want to look at it that way, it just looks very cheap relative to tech anywhere else in the world.
Yeah, and I hadn't actually looked at that chart in a while. It's quite a wild chart. That's all for Stockwatch today. Thanks to our guest, David Shapiro from Sasfin Securities, Defense ETF, ITA is his pick, Chantal, Marx, FNB Wealth and Investments, going with Naspers Process. Up next to close, stay watching.